Alrighty. Cryptocurrency, just kidding. Finally, we have the stock market here. It would appear, coin market cap, if you're familiar with that. Here we have companies market cap. Would you look at that? We got all the behemoths above $1 trillion, all the main entities, governing the world and controlling the powers at hand, all here on this page, colored out in black, white, red, and green, and all the colors in between. Lots going on here in the economy. Traditional world of finance is failing. There's only so many things you can invest into. Where will you put your fancy, fabulous, numbered rectangles? Coming up, though, we have commodities and precious metals today. We have some things to look out for in the coming second half of what has been a rather turbulent year here for the economy. Is there a recession? Are we going into the Great Depression? These are all very good questions. Everyone's stressing, pressing the sell button, but I'm here to say that it's all nothing. Anyway, looking at the market, looking at the behemoths above $1 trillion here, remaining rather sideways, a few of them in the green. Tesla, Amazon, Alphabet, Microsoft in the green over the last 30 days, though in the red today, down roughly between 0 and 1%, almost 3% in Amazon's case. Apple and Saudi Aramco, do apologize for that pronunciation, are in the red over the last month and are almost in the red today. We have just under $1 trillion. Tesla, Berkshire Hathaway, Johnson & Johnson, United Health, ranging sideways here, trying to hold through this, extreme fear-filled time here in the economy, and are still within their regular trading range, doing well over the month in terms of United Health, Johnson & Johnson, though Tesla and Berkshire Hathaway might have some work to do. Meta in the red, sadly as well. Visa in the green. Nvidia in the red. Tech, I do believe, will likely continue to increase, though we have to go with the flow of what's really going on here. It would appear doing really well. ProSus up, 15.5% today in the green over the last 30 days. A company not doing very well would be Tencent, down about 4% today. So 5 things to watch in the markets in the weeks ahead. The European Central Bank will hold its annual retreat in Portugal. This meeting will consist of some rather powerful figures, including the likes of Federal Reserve Chair Jerome Powell. They will all appear at a panel discussion. The first half of what has been an exceptionally turbulent year in the markets is ending, with investors wondering whether the next 6 months could bring some respite or more volatility. The economic calendar features the PCE price index, an inflation gauge watched by the Fed, along with the latest inflation data out of the Eurozone and Chinese PMIs. Some of the things to watch out for are the Sintra Forum. The ECB's 3-day forum in Portugal's Sintra gets underway on Monday against a backdrop of worries over whether central bank moves to stamp out the strongest inflation surge in decades could tip the global economy into a recession. Investors will be closely watching Wednesday's panel discussion for insights on how the central bank heads view the trade-off between curbing inflation while still trying to ensure a soft landing for the global economy. Another aspect to watch out for would be regarding 6 months characterized by the fastest rate hiking cycles in decades. Market turmoil and a war that spurred spiraling inflation are drawing to a close, leaving investors to ponder what the second half may bring, and notes how the S&p 500 is down around 18% year to date, though you'll find out in a moment how EngineeringRobo members invested in the S&p 500 only lost 2% year to date, and it would appear the NASDAQ is down over 10% as well, with investors' expectations fluctuating between continued high inflation and an economic downturn caused by Despite a hawkish Fed, few believe the market's volatility will subside anytime soon. U.S. is to release a raft of economic data in the coming week, which will show how the economy is faring amid the Fed's aggressive rate hiking cycle. Economists are expecting durable goods orders to slow, consumer confidence to deteriorate further, and manufacturing surveys to weaken further, adding to concerns over the economic outlook. Eurozone inflation. The Eurozone is to publish consumer price inflation data for June on Friday, which is expected to hit a fresh record high of 8.3% year over year as energy and food costs continue to soar. The inflation data will likely add fuel to the debate over whether the ECB should deliver larger interest rate hikes after a quarter-point increase flagged for July, in what will be its first move to tighten policy in more than a decade. And lastly, watch out for data coming out of China. China is due to release data on industrial profits on Monday, followed by PMI data on Thursday and Friday, respectively. Positive numbers could offer some hope to downbeat financial markets. It would be a welcome signal for the economy and for those who see Chinese stocks as a haven for the stagflation fears gripping the West. So, lots going on here in the traditional world of finance sphere. Find this article in the description, but many are speculating increased, volatility downside and or sideways here in the market. But during times of extreme fear here, we will have to go with the flow of how it usually plays out because the market tends to do the exact opposite of investor incentives. Now we're going to power through some of these indexes real quick here. The S&P 500 has experienced, roughly that 18% in downside year to date. Though, as you can see, EngineeringRobo suggested you begin getting out of the S&P 500 all the way back up near $4,350. Ever since two of our chosen three robos became bearish, we proceeded to experience over 16% in downside, and we are patiently waiting to get back into the S&P 500 when our bullish parameters are met. Support may be found here, currently waiting to interact with 3812 down below. Hopefully we can hold along it, though the strongest level down below waiting for us is 2952. Along the way, watch out for 3236. Though we are looking for significant interactions with these levels, we are not eager to jump in along them, especially with bearish robos in play as we make our way toward sort of like this ascending trend line here as support or my horizontal levels. When two of our chosen three robos return to a bullish state, we can consider investing that 50% investment ratio, and we will have to find ourselves interacting above this solid descending trend line here above, waiting for us to consider investing that 30% downtrend line investment ratio. Looking at the Dow Jones, EngineeringRobo has saved us from over 14% in downside ever since the end of March of this year. Here, it would appear we are looking for interaction with potential support down below. 29,373 is a key level to watch out for, though a stronger level to consider, 26,306. All the way down below if we were to continue any sort of downside, which is suggested by those bearish robos in play. 50% can be invested when we have bullish robos returning, 20% at support once that has been confirmed, and that remaining 30% can be invested when we are free from this downtrend line. Looking at the NASDAQ, floating between some key levels in search of support and under the influence of bearish robos here, it would appear we have been saved from over 23% in downside ever since the beginning of January. Bearish robo advisors in play do suggest continued downside and or sideways. 50% can be invested when bullish robos return, 20% at support once that has been confirmed. Down below waiting for us, 120 is a key level to consider. At the moment, we are waiting for more levels to form kind of thing for us to visualize moving forward. Our only hopes for support at the exact moment are my aforementioned 120 level down below, or this ascending trend line, which comes from like a million years ago. So right now we are floating in space. We do anticipate continued volatility to play out here. It would appear a potential downtrend line to consider, though not my favorite. May look like this. Perhaps this may suggest the descending resistance present giving us a hard time, which could push us further toward my support levels. If we are free from this downtrend line, we could anticipate some moves upward here. Watch out for resistance waiting at 210. Bullish robos here have allowed us to experience some nice gains here over the following years. Right now, we are just patiently waiting for those bullish parameters to return. Thank you so much for tuning in. Thank you for hearing my analysis. Check out EngineeringRobo for free with the link in the description. Let me know in the comments down below anything you'd like to see in the next video.